Well, this week has been loaded with economic data, y'all. We waited until today to do this video so that we could capture the jobs number. Had the Fed meet on Wednesday, so interest rates have moved in a big way this week. Did the Fed help us? Yeah. Did the jobs report this morning help us? Yeah. So how much did it help us? Well, that's what we're going to talk about in today's video. Y'all, today is Friday, the 2nd of August. I hope everyone is doing well. We finally have some good news on the interest rate front, or significantly good news. We've seen a nice trend line over the last few weeks of rates improving. Over the last 30 days, really, we've seen nice improvement in rates. We're going to look at what we've seen as far as the markets are concerned and how much we've moved when we wrap up the video. Fed met on Wednesday. This was a very anticipated meeting, not because folks were really expecting a cut. We did not get one. The markets were not anticipating a cut on Wednesday, but what we were looking for was specifically the Fed's statement, which was not much changed from the prior statement, but the Q&A for Jerome Powell in the follow-up to the release of those minutes was significant in that the reporters in the room were trying to get a read from Powell on a September cut. And even though numerous questions were asked around the strong likelihood that the market is pricing in a cut for September, Powell did nothing to dispel that notion that we would see a cut in September. So that communicated pretty loudly to the markets, the Fed's going to move in September, y'all. Jumping ahead, when you look at the CME FedWatch tool, now is pricing in a 100% likelihood of a cut at their 9/18 meeting. The only question now is, how far will they go? So enter in the employment report from this morning. Y'all, the expectations going into this morning's jobs report was that we would see a 25 basis point cut at the September meeting. Again, 100% chance of that as far as what the markets are pricing in. We're starting to see priced in, though, the possibility of a 50 basis point cut at that meeting. That would be very significant, y'all. We have not priced that in. You're starting to see some movement in that direction from the bond market. So when you look at the mix of what is predicted for the September meeting, that 100% likelihood of a cut is now starting to price in a bit of a premium for more than a quarter. It's going to be interesting to see what happens there, y'all. This is where I reiterate again, understand that the bond market is going to give predictions and pricing in real time today for what they think bonds are going to be trading at after that Fed meeting in September. So another way of saying it, we've already priced in the likelihood of a cut. So if folks are waiting for that, they might be disappointed if they're expecting rates to drop further when the Fed does what they are expected to do. Really, the only way that's going to happen, y'all, is if the Fed does what's not expected and goes deeper. A little bit of a chance of that, so we'll see. The jobs numbers that came in this morning, much weaker than expected, y'all. 185,000 jobs were expected to be revealed in the report this morning. We got 114,000. Unemployment rate ticked up unexpectedly to 4.3%. This was a much weaker read on jobs, and we've got revisions downward going all the way back to May. And we're going to have even further reductions in that May total that was reported as more data comes out. So, y'all, the jobs front, we've been talking a lot about how the Bureau of Labor Statistics has been underreporting weakness in the labor market. It may well be that we are seeing them return back to a more appropriate baseline analysis of job creation because they want a cut before the election. Y'all, I wish I could say that politics doesn't weigh into it, but when you've got a controlled money supply and you have politically appointed folks that direct the cost of that money supply, it's naive to think that there aren't political pressures at play there. We've got an election upcoming. There's a lot of pressure on these folks to do a little bit of election engineering here to make the decisions that make more people happy, especially the ones that might control their positions after that election is completed. So I'm going to just leave that there, y'all. Here's the numbers according to Mortgage News Daily, and it's very good news. We were sitting 30 days ago at 7.13 in the Mortgage News Daily survey of a 30-year fixed rate conforming loan. 1 week ago, we were at 6.86, so about a quarter of a point less. Today, 6.40, y'all. You have to go back to April of 2023 to find rates as low as they are today. So we are sitting at 16-month lows in interest rates as far as Mortgage News Daily is concerned. What does that mean? Well, on a $400,000 mortgage, if we were locking it today, you're paying $194 less a month for that mortgage than you were 30 days ago. That's a significant change, y'all. That equates to $31,000 in more buying power. Another way of saying that, you're buying $431 today for what $400 cost you 4 weeks ago. That is a significant change, y'all. That is a nice benefit for current buyers. Again, folks, if you're on the fence and you're waiting for interest rates to drop and you're waiting for that official September 18th meeting, be cautious, because if the Fed does what they're expected to do, we're not going to see much of a change from current pricing, because again, we're already pricing those benefits into the current market. What you're going to face, though, is when the Fed does what they're expected, two things are going to happen. Rates aren't going to change all that much from where they are right now. And number two, you're going to have probably double the number of buyers that are diving in at that point to try and capture those lower rates, unaware that we've already got them. So in any event, I hope this is helpful. You don't want to be competing against all of those folks in September when the Fed does what the market has already priced in that they are likely to do. In any event, hope this is helpful for you and for your clients. A little bit longer call today, just because of the amount of news that we've got. Good news on the inflation front. Bad news if you're looking for a job, y'all. And we feel for the folks that are struggling in a tightening labor market or in a weakening labor market. But as far as housing is concerned, which is the focus of this call, these are very good numbers for us. In any event, hope this is helpful. Stay blessed, stay safe. Have a great weekend. If you need to reach me, all my contact info is on the screen. We will talk to you next week.